Right, hello and welcome to Camel Finance. I'm your boy, Camel, and this is just going to be a quick update. I've been away, I took the wife away for a couple of days, and we're kind of back, but we'll be back to normal content tomorrow. A quick message to the members. I've looked through all the member stocks. Long and Strong continue to push, and I'll update you if something changes. For everyone else, I mostly just wanted to click through a couple of charts because, I said, this is Bitcoin. If we stay below this downward sloping resistance line, then we're in easy mode. And of course, markets aren't always that easy. Now, I don't think this is beyond the realm of possibility. If we move this up, we're in that neighborhood to see this thing roll over. I don't think there's too much to be concerned about here, and I certainly don't want to get caught offside, FOMOing in, buying this breakout, if indeed we are going to roll over and find that cycle low. Now, what do we know objectively speaking? From a cycle count perspective, this is too early for a cycle low. This would be somewhere in the neighborhood of day 43. Now, it's important to point out that the cycles are an edge, not a holy grail. Right, 80% of the time, cycles form inside of that window with a 10% tolerance. So what I can say is I've got an 80% probability that the price rolls over and we make a cycle low inside of this timing window, right? So that would be a 60-day cycle low from here to here, plus or minus 6 days. I've got it marked as 61. So anytime from the 9th of February, plus or minus 6 days would be a legally qualifying cycle. And so let's think about this in two ways. If the price roughly follows my yellow squiggle, right, from here, if we roll over in the next couple of days, perhaps when Jay Powell speaks today at FOMC, he says something to spook the markets and we roll over and then we get down here and we get some kind of CPI print or whatever. We find a cycle low and make a swing. If this happens, the market will attribute this whole thing to Jay Powell spooking the markets and then a CPI print that sends us higher or something that catalyzes this bounce out of the cycle low. And most importantly, by me being patient, I'll be able to say, well, yeah, okay, no surprises, because 80% of these cycle lows show up within the specified timing window, as I said, okay? So that's one scenario. The other scenario is that this is one of the 20% of the times where the cycle low has been forced early and this breakout retest is about to be resumed to the upside. So if we were to break out back above that high set yesterday, right? If we were to do something like this, breakout retest and resume off, then we might have to entertain that this indeed is one of those cycles that forms inside of that 20% window. So the question is, what do I want to do? Do I want to put my bets, do I want to place my strategy on something with an 80% probability or on something with a 20% probability? So as a cycle trader, it tells me to be open to a rollover, tells me the highest probability setup is indeed waiting until we get more inside of this timing window, somewhere in this neighborhood. And so as it stands right now, that's the plan. That is my plan and I'm sticking to it. However, we will have to have a point, a line in the sand at which if price trades above it, we can say, well, Camel, you're wrong. This is not going to be one of the 60-day cycle lows. We're going to have an early cycle low here. And for me, that line is this red one at the top of this channel. So we get above there. What level is that? It's about 44.5, 40, 44.6, 44.8, something in that region, right? Probably I'll be a buyer at 45.2, I would have thought. So we get up into that neighborhood and the long will look something like this probably. There's also an opportunity here, or should I say an alternate scenario, where I don't even add an additional Bitcoin position and instead I decide to play this via the crypto-related equities instead. So perhaps if Bitcoin starts to just blast off here and doesn't really provide anywhere to give us an entry, well, that's okay because we've got two positions. We'll keep pushing the original two Bitcoin positions. And perhaps instead the way to play it would be to look for some kind of Coinbase, MicroStrategy, Riot, or Marathon position to have a look at. Now, I haven't even looked at this chart. I haven't looked at any of these charts, so I'm going to go through these now really quickly and see if we can get any hints. Okay, so far breakout retest possibly looking for that resumption, or is it going to roll over into that cycle low? We'll find out, right? See if we can learn anything from MicroStrategy. Look, overall, not too dissimilar from what we expected, is it? So if I drag this back and line this up with the 9th of February, this is more or less what we're doing. So we could even permit a move all the way into resistance at the red before we roll over. As I said before, nothing wrong with getting long out of this swing, but there's also nothing to say we don't come down and undercut that low. Here's Riot, again, not too dissimilar from what we were expecting, and Marathon, not too dissimilar from what we were expecting, right? It could certainly roll over from here as well. We could see this look something more like this, okay? And then out of that swing, we have got a nice swing to get long at, or of course the safer entry at the downward sloping red resistance line. So overall, I don't really think anything is out of the ordinary yet. I think the only way that you're going to see Camel start to chase this market higher is if Bitcoin starts to do something like this yellow squiggle here. But I actually don't think that's the case. I think based on my experience, based on the number of cycles I've traded, based on the number of times I've seen something like this and it resolves into that cycle low also based on what I said earlier about 80% of these cycle lows showing up inside of the timing window, then it kind of seems like I'd be silly to bet that this is one of the 20% of the times, right? It seems like if I want to put the probabilities in my favor, just display a little more patience. Like I said, in terms of these squiggles, right, not too dissimilar. Counter trend bounce, reject and roll over into that cycle low and go. There's also a narrative for this dip. As I said, we could have J Powell spook the markets here. That could force the rollover into the cycle low, something like this. And then everyone will blame this decline on J Powell when actually we would have known this was happening ever since we had the failed cycle print back here, right, where we came down and closed a daily candle below this cycle, telling us that we would indeed get this yellow squiggle play out or something quite similar to it. So I know a bunch of you have got FOMO right now, and maybe that FOMO is justified because this is what comes next. But for me, like I said, we're going to continue to play patient. We'll stack the odds in our favor. Whilst we're here, might as well flick through a few charts. That the dollar has walked sideways out of this upward sloping support line, hasn't it? And again, we've got that narrative, right? We've got that narrative. J Powell can spook the markets. We maybe get a deviation here and then we roll over something like this and look to have a 3-year cycle low. Of course, the opposite could still be true. We could see something like this, in which case that will confirm that is indeed the 3-year cycle low. Some people have been asking me, do we need the Dixie, the dollar, to break down like this yellow squiggle suggests? Do we need that to occur to have risk assets move higher? And the answer is no, we don't need it. But this does make it easier, okay? So there are rare times where you can see the dollar run and everything else run. Typically, they move inversely to one another, but we could certainly see the dollar do this and still put in a blow-off top for risk assets. This would make much more logical sense, and this would make it a lot easier, in my humble opinion. And it's kind of the same with the yields, right? If the yields sniff out that the Fed is actually done hiking, then what we'll probably see is this rejection continue to play out and yields go lower. If we do indeed get the market call the Fed's bluff here, if the market knows cuts are coming in March or May at the latest, which is of course the base case on this channel, there's no reason why yields don't start to fall towards 2s over the coming couple of months. So again, we're going to learn something based on FOMC and then of course the CPI print in a couple of weeks time. Overall, as you can see though, nothing's out of whack here, right? Nothing's really beyond expectations. This is still following our yellow squiggle again. I mean, these yellow squiggles should be an indicator at this point. And you can see probably that is the daily cycle top, looking for a day 40 cycle low for oil, which would also be due around the 9th of Feb, right? So pretty interesting. Probably get some kind of pullback into that 9th of Feb. What is it that's going to occur around the 9th of Feb that's going to catalyze all of these bounces out of the cycle lows? Well, I would speculate it's the 13th of Feb where we've got the CPI print, and of course we're expecting it to have a 2 at the front. So it'll be interesting, right? But again, show me the charts, I'll tell you the news. Don't pay too much attention to the news, just look at the charts. The charts don't look so bad. People were saying, oh, what do I think of the stock market? There's nothing to think, right? We are also due for a cycle low pullback. Around the 6th of February would give us a half cycle low, perfect day 21. So again, if that showed up 2 or 3 days later, then again, it fits that 9th of February timeline to see a little bit of a pullback into a half cycle low before resumption of the primary uptrend. So again, there's nothing to think because everything is bullish, right? Everything just keeps going up. What about the NASDAQ? Still above support, right? Still climbing higher, still above all-time highs. Dow Jones all the way through our measured move target, okay? That measured move is this red line from back here, something in this neighborhood, I think, and we extrapolate it out, gives us about 38.2, and as you can see, look, we're straight through the target. But are we going to sell this right now? No, we're going to keep pushing it because all the while we're above this trend line, we can continue to push this trade and justify it that it is still reasonable to continue to push this trade, start to trade below the upward sloping red support line, and it'll be time to get out of the way of this trade. And last but not least, the Russell 2K. Look, so long as this thing keeps going up, okay, we can breathe a sigh of relief. I just wonder if this will work. Something like that. Yeah, it does. Usually they do. So let's see if we can hold that, right? Let's see if we can push up, see if we can get back above this range break, and let's see if we can have breadth widen as we move towards the blow-off tops. Normally, when we approach a blow-off top, right, when we're nearing tops, usually breadth starts to narrow. But this time's probably going to be different. This time is probably going to be a much wider, broader market top because the asset managers are still so underexposed and they're going to be forced into the market to chase this thing higher. So overall, right, nothing really... I've only been away a couple of days. Nothing's really changed, right? We're still chilling. We are still pushing these trades. Yes, as we get into FOMC today and for the rest of the week, does it make sense that we see some chop and some games and some volatility as always? Of course it does. But the thing I'm hoping for is that Bitcoin rolls over. So do the crypto-related equities. The stocks, if they roll over into that half cycle low, that all makes sense. And then perhaps a little bit of chop leading into CPI before CPI ignites the blow-off top into new price discovery. So apologies for getting it out to you a bit later. Like I said, I've been away for a couple of days, so That's why we've just run through this. We'll be back to normal content first thing in the morning. And of course, when we come back tomorrow, we will probably have significantly different pricing based on these CME charts, right? Well, this is going to be ticked off. They're going to announce the pause today. I'm as sure can be about that, as sure as you can be in a market. But I think March is going to reprice, right? Now, no one knows which direction, up or down. We'll see whether or not the market buys the lizard talk that comes out of the Fed. Does it go up? I don't know. Does it go down? We're going to find out. But one thing I do know is we are most probably not getting out of May without rate cuts, right? We're not getting out of May without seeing rate cuts. So one day at a time, as always, we'll be making sure we take a good look at these tomorrow to see if we've learned anything. And most importantly, like I said, to see if the market believes the BS that the Fed is undeniably about to spew. So in the meantime, I hope you're doing well in life. Halfway through the week already. And until next time, take care from me. All the best. Cheers. Bye.